You opened your phone. Maybe it was late at night, maybe you were on your lunch break, maybe you were just scrolling like you always do, and then you saw it. A stock that was up 400%, 500%. People in forums were celebrating, someone posted a screenshot of their account balance and it looked like a lottery win. And something inside you shifted. That feeling, that pull, that quiet voice that said, what if this time is different? What if I get in now and I actually catch something real? So you did what felt logical, you looked it up, you read the comments, you watched a few videos, and everyone seemed so confident, so certain, like the train was leaving the station and you had about 30 seconds to jump on board, and here is where the story gets painfully familiar. You bought in. Maybe it was a few $100s, maybe it was more, and for a moment, maybe even for a few days, it actually worked. The number went up, you felt something you had never quite felt before when it came to money. You felt smart. You felt like you had finally cracked something that most people never figure out. And then it stopped. Not slowly, not gradually, it just stopped. And then it started going the other direction. And you told yourself it was temporary, just a dip. Every investment dips. You held, you waited, you refreshed the page more times than you want to admit. And somewhere between the third and fourth week, you realized the money was just gone. Not all of it, maybe, but enough to sting. Enough to make you question yourself. Enough to make you feel like maybe investing just is not for you. But here is what nobody told you. And this is exactly why you need to hear this right now. Because understanding what actually happened to you is the difference between recovering from this and repeating it for the next 10 years. What happened to you was not a mistake. It was a trap. A very specific, very predictable trap that catches almost every single first-time investor. And the people who built that trap? They were counting on you walking right into it. Before we go any further, I want to mention something. There is a program linked in the description of this video. I am going to tell you more about it at the end. But right now, all I will say is this. If anything in this video resonates with you, if you feel like you have been fumbling around in the dark, trying to figure out investing and losing money while doing it, that program exists to change that. Most people who need it most will watch this video and do nothing. That is just the reality. But the ones who actually take action on what they learn today, those are the ones whose financial story looks completely different a year from now. Just keep that in the back of your mind. Now, let me explain exactly what happens inside the brain of a first-time investor when they see a trending stock. There is a concept called FOMO, fear of missing out. You have heard of it. But here is what nobody explains. FOMO does not just make you feel anxious. It actually rewires how your brain processes risk. When you see a stock exploding in value and everyone around you is talking about it, your brain goes into a very specific mode. It starts minimizing the downside, it starts magnifying the upside, and it tells you that inaction is the real risk. This is not a weakness, this is biology. This is what your brain was built to do in survival situations. The problem is that the stock market is not a survival situation. And when your ancient survival wiring gets plugged into a modern financial instrument, the results are almost always catastrophic for beginners. And the people who understand this, the institutional investors, the hedge funds, the experienced traders, they are not just aware of this psychological pattern, they are actively engineering it. Think about that. Someone on the other side of your trade spent enormous resources studying exactly how to trigger your FOMO response at the precise moment when buying serves them, not you. The stock was trending because someone needed it to trend. The forum posts were excited because excitement creates volume. And volume is what allows large holders to exit their positions while retail investors, people exactly like you, absorb the cost. This is called a pump and dump. And it does not always look like an obvious scam. Sometimes it looks like a real company with a real product and real news coverage. The mechanics are the same whether the manipulation is aggressive or subtle, and the person sitting at home watching the number go up, feeling hopeful, that person is always the last one holding the bag. Here is the brutal truth that most financial content will never say out loud. The market does not reward the most enthusiastic, it rewards the most informed and the most patient. Enthusiasm without knowledge is just expensive. And the worst part? When first-time investors lose money on trending stocks, most of them do not stop. They double down. Not on that same stock necessarily, but on the behavior. They start looking for the next hot thing, because somewhere in their mind they believe they were just unlucky, that the strategy was right and the timing was off. That cycle, that pattern of chasing the next trend, losing, chasing again. That is the single most common way that ordinary people with genuine aspirations of building wealth end up exactly where they started, except with less money and more self-doubt. I want you to think about someone you know, someone who has been dabbling in investing for years, not seriously, just here and there, buying things they heard about, selling when they panic, watching their account balance bounce up and down and ultimately staying flat or declining over time despite a market that, over the same period, actually grew significantly. That person is not unintelligent. That person is just operating without a framework, without the understanding of how markets actually move, how trends actually form, and how the game is actually played at a level above the one they were taught to play at. The investors who consistently build real wealth are not the ones who are best at picking trending stocks. They are the ones who understand that timing the market is a losing game for almost everyone who tries it. They understand that the moment something becomes a trending topic in mainstream conversation, the opportunity has almost certainly already passed for regular people. By the time you hear about it on social media, by the time the forum is exploding with screenshots, by the time your group chat is sending links about a particular stock, the people who bought it early are already calculating their exit. And your buying is part of what makes their exit profitable. This is not cynicism. This is not me telling you the system is rigged and you should give up. This is me telling you that the game has rules. And the people who win are the ones who know the rules. You are playing without knowing the rules. And that is fixable. Here is what a completely different financial reality actually looks like. When you understand how to evaluate a company on its actual fundamentals. When you understand what drives real long-term value versus short-term hype. When you develop the patience to allow compounding to work the way it is supposed to work. When you stop reacting to news and start thinking in years instead of days. The entire experience of investing transforms. The anxiety disappears, not because the market stops moving, it never stops moving, but because you are no longer dependent on short-term price action to validate your decisions. You know why you own what you own. You know what conditions would actually change that thesis. And you are not checking your phone 40 times a day hoping for a miracle. People who invest with genuine knowledge and a real strategy do not feel desperate. They feel grounded. They understand that market dips are not emergencies. They are opportunities. They understand that the investor who panics and sells at the bottom is funding the wealth of the investor who stays calm and buys more. The difference in outcomes over a 10-year period between someone who chases trends and someone who invests strategically is not a little bit different. It is not even double. In many documented cases, it is the difference between having nothing and having a number that actually changes the trajectory of your life. That is not hyperbole. The math of compounding, when applied correctly and consistently, produces results that look almost impossible to the person who never understood how it works. But you have to start. And you have to start correctly. Because years of chasing trends and losing money does not just cost you money, it costs you time. And time in the market, real time with real capital working for you, is the one thing that money itself cannot buy back. Every year you spend in the cycle of chasing, losing, recovering, and chasing again is a year of compounding that you can never get back. The person who figured this out at the beginning and invested steadily and wisely from year one is not just ahead of you financially. The math means they may be so far ahead that catching up requires heroic effort. That is the real cost of what happened to you, not just the dollars you lost, the years of potential growth that were never generated. And here is the thing, most people who watch a video like this feel something. They feel recognition. They feel that uncomfortable mix of relief that someone finally explained it clearly and frustration that they did not understand this sooner. And then they close the tab. They tell themselves they will figure it out. They keep doing what they have been doing. Do not be that person. The program in the description of this video is built specifically for investors who are done guessing. People who are tired of the cycle. People who are ready to stop treating investing like a lottery ticket and start treating it like the wealth-building tool it actually is when used correctly. Most people will scroll past it, and most people will still be in the same financial position next year that they are in today. But the ones who click, the ones who actually commit to learning this the right way, those people are making a decision that their future self will look back on and call the turning point. Not tomorrow. Now. Because tomorrow you will feel less urgency than you feel right now. And the version of you that waits always costs the version of you that waits the most